Good afternoon, and we are back with yet another topic for revision today. And what we are taking up today is business valuation. Why business valuation? Because it forms the basis for a lot of other discussions, namely mergers and acquisition, that we are going to do, and corporate failure and internal reconstruction also to a certain extent. Now, business valuation as a discipline, of course, is a very wide topic, and people have built their entire careers on that. But what we have in the AFM exam is valuation of businesses using a couple of known methods. Okay, and what methods are these? We'll get into that. So, you have learned some of them at skill level in all likelihood, and you must have studied some of these, when we were doing cost of capital wala discussion also. But now the focus is more on valuing the entire business and not valuing just one share or one loan note. The focus is on valuation of the entire business. And for that, there are different methods that we'll be putting to use. So let's get a head start on that. After we are done with revising of business valuation today, of course, the sheets are already shared with you. What you have to do is you have to go through the sheets, go through the individual questions, not that they are very tough in any way, because this will be I would say, the bedrock on which we are going to build the discussion of mergers and acquisition. Okay, so pay attention. When we look at business valuation, there are three primary methods that we are looking at. The first one is the set of our cash flow based methods, wherein we have the dividend valuation model and the free cash flow or free cash flow to equity model. Okay. When I talk of the dividend valuation model, you know how is the dividend valuation model used for share valuation. If it is a constant dividend every year, then we basically use the formula for present value of perpetuity. We take the amount of constant annual dividend, we divide that by the rate, and we get that rate here is cost of equity, and we get the value per share. If we are using the dividend growth model, for example, then the dividend growth model measures price per share as, you know how that works. P0 is D1 upon KE, sorry, D1 upon KE minus G. Okay, this will give you the price per share in case the dividends are constantly growing each year. Okay, so you start with a D0 which is given to you. Okay, so D1 is calculated as D0 plus growth rate. And there are multiple ways of calculating this growth rate. One of these is using the Gordon's growth model. How does that work? Gordon's growth model is, first of all, it will take the accounting rate of return into retention percentage. Okay. And the second one is your geometric growth model or the compound growth model. What does it do? It takes dividend today upon dividend n years ago raised to 1 by n minus 1. And of course, n is the जितने साल पहले का dividend है, that is used to calculate the dividend growth. Now, this geometric growth model can be applied to other scenarios also, but here we are using it to calculate the growth rate in the price of a share, which ultimately we are using for prediction of the next expected dividend. And then, of course, that is used for the share valuation. You also have the free cash flow and the free cash flow to equity methods, which again evaluate the total cash flow that the company expects to make, or the project, not project here, more so a company or a business expects to make in the upcoming days, and then that is used for the valuation of the company. Then you have two market based methods, one of which is actually three market based methods. The market capitalization method, what it does is it takes the market price per share, multiplies that by the total number of shares, and you get the value of the company. or you can also use the PE based method. The PE based method is again a formula based approach. And the last one, this is new at skill level, which is market to book ratio. ठीक है. Now, apart from that, there are asset based methods also, book value method, realizable value approach. We learn all of these one by one. When it comes to cash flow based methods, there is an important calculation that we need to do, which is free cash flow. What is free cash flow? Free cash flow means the amount of cash that is left after the business has met all its commitments and obligations. So total revenue minus cost minus the investment to be made, that gives you the free cash flow. A free cash flow is cash flow which is not committed anywhere else. And when you take this cash flow which is not committed anywhere else, then what you are left with is cash available for whatever future purposes you could have. And this free cash flow is then used for business valuation. Or you take, say for example, they have given you free cash flow for 5 years, so you do T1 to T5 ka calculation, you discount it using an appropriate rate. Then you have T6 to infinity ka cash flow, you apply the appropriate formula there, and you get the total value of the business. Now there is a concept known as planning horizon. Okay, the planning horizon is a period where the firm can earn above average returns and cash flows are assumed to grow over time. When I say, I mean, usually, the planning horizon in real life also, when we tackle valuation situations, we take the planning horizon as 5 years, because 5 years tak ka cash flow can be predicted with some amount of accuracy. Fifth year ke baad, it becomes very difficult to make any predictions or projections about the cash flow. Okay. Now, when we are making these cash flow projections, these are based on revenue, cost, investments, and numbers which can be predicted for the first 5 years. Now, the thing is that in the first 5 years, the business expects to grow at a rapid rate. But year 4 ke baad, year 5 ke baad, usually what happens is the growth rate kind of steadies. ठीक है. First 5 years it will go up rapidly. फिर ईयर 5 के बाद थोड़ा सा इधर वो स्टडी हो जाएगा. It will be a very minuscule rate, or it might even decline. So decline wala situation though is not there in our syllabus, but in real life, you either assume it to be constant after year 5, or you take values at a very small growth rate, because the fact of life is that it is difficult to predict cash flows which occur after the fifth year. So instead of making wild assumptions about growth rates, you take it at a same constant level that you had till year 5, and then you continue with that calculation. Okay. Now, talking of free cash flows that occur during the planning horizon, they are discounted at WACC. So if your planning horizon in is 5 years, okay, then T1, T2, T3, T4 and T5. Okay, you take these 5 cash flows, you discount them using the WACC. Now then you will have cash flows T6 to foreseeable future. So in this case, you will either have constant cash flow. So you will have to use present value of perpetuity, or you will have cash flows with constant growth rate. ठीक है. Here you will have to use PV of growing perpetuity. So this will be T1 to T5 का cash flow का present value, and then T6 to foreseeable future के cash flow का present value, and that will help you to calculate the value of the business. ठीक है. So add the two together. From that, subtract the value of short-term investments where firm has deployed its money outside the organization. You will get value of the firm. From that, you subtract the value of debt. In most questions, they will give you the market value of debt. वो subtract करो, you will get value of equity. ठीक है. Value of debt is mostly given in the question, or the question could say something like the company's debt of face value 100 is trading at 105. ठीक है. And say for example you have 20,000 loan notes, so market value will be 20,000 into 105. So that is how you will arrive at the number. And वो value of debt either clearly दिया रहेगा, या फिर you will have to calculate using one or two quick steps, and then you will arrive at the value of debt. Total value of business में से value of debt subtract करो, you will be left with value of equity. ठीक है. Now when we are talking about, see, we did discuss forecasting growth, how that is in real life. In real life also, when we make valuations, we do a thorough study. So we know कि यार, when we are predicting a growth rate of 10% each year or 15% each year, it is based on historical estimates. What has happened in the past is expected to repeat in the future. We also do an analysis of forecast, पर्टिकुलरली फॉर लिस्टेड कंपनीज. वी ट्राई टू अंडरस्टैंड कि अभी ये इंडस्ट्री में क्या हो रहा है. जैसे राइट नाउ द फिनटेक इंडस्ट्री इज बूमिंग और द एआई इंडस्ट्री इज बूमिंग. सो वील ट्राई टू अंडरस्टैंड दैट एंड अप्लाई that number also to predict the growth rate for the future, post which we'll be doing some fundamental analysis. Fundamental analysis is, basically your Gordon's growth model for prediction of the growth rates. Now in exam, there are two situations that will come up in a lot of M&A questions also, in a lot of corporate failure questions also, and investment appraisal questions also. Now, what are these situations? The first one is replacement asset investment. See, every year as the business continues, it will पुराना asset खराब होगा and you will bring in a new asset. But this new asset is technically not adding to your productive capacity. It is only replacing the machine that has been disposed of. ठीक है. So how do we tackle a replacement asset investment? See, बहुत बार the question in 99% of the cases will give you an instruction. What is that instruction? The amount of investment in replacement assets is equal to depreciation. ये दिया रहेगा. Now, when this is given, let's think of a scenario. ठीक है. Think about a business which has a profit after tax of 100, depreciation is 20. Now, as per the instruction in question, the amount of investment in replacement assets is equal to depreciation. So, अगर depreciation 20 है, investment in replacement assets is also 20. You have profit after tax. To that, you add back the amount of depreciation, which is a non-cash expense. ठीक है. You know how when we used to prepare cash flow statement, तो हम कैसे करते थे? Profit after tax plus non-cash plus non-operating non-cash expense and बाकी सब करके we used to get cash flow from operating activity. तो यहाँ पे 100 में I added the 20, I got cash flow from operating activity 120. Then I have to consider investing activity also. वहाँ पे there is a purchase of non-current asset, outflow है, subtract 20. Net cash flow is 120 minus 20, which is 100. See, यहाँ पे you are adding 20, and because the purchase of non-current asset is equal to the amount of depreciation, the number that you are subtracting is also 20. So plus 20 minus 20, effect on net cash flow is 0. So whenever the question contains this instruction, amount of investment in replacement assets is equal to depreciation, do nothing. Neither add back nor subtract, because unnecessarily, you will keep on increasing the steps that you are encountering. ठीक है. तो neither add nor subtract, आपका final position remains unchanged. But yes, the question might give you key, with the expanding scale of operations, the company needs to purchase more of non-current asset. This is not to replace an old asset. This is for tackling the next stage of growth. Okay. So this is basically to match the growth of business, not for replacing a worn out asset. This should be shown as an outflow. ये additional outflow है. यहाँ पे where the question says that the amount of investment in replacement assets is equal to depreciation, वहां पे कुछ मत करना, don't do anything there, and यहाँ पे show it as an outflow. It's as simple. ठीक है. Keep this instruction in mind. It will come in very handy later. Now, oftentimes the question will ask you to calculate the value of equity. Now, if you want to directly calculate the value of equity, तो आप क्या करेंगे? You will take free cash flow to equity. What is free cash flow to equity? पहले free cash flow निकालो, which is revenue minus cost minus investment in non-current assets. उसमें से subtract the debt repayment, interest और debt repayment subtract करो. The number that is left is amount of cash only for equity shareholders. That is free cash flow to equity. ठीक है. When free cash flow to equity is given, उसका when you calculate the present value of all the future free cash flow to equity, आपको सीधा business equity value मिलेगा. बट इफ इन द क्वेश्चन यू डोंट हैव फ्री कैश फ्लो टू इक्विटी, आपको दिया है फ्री कैश फ्लो, तो डिस्काउंट द फ्री कैश फ्लो यूजिंग WACC. ठीक है. डिस्काउंट द फ्री कैश फ्लो यूजिंग WACC, उसमें से वैल्यू ऑफ डेट सब्ट्रैक्ट करो, यू विल गेट वैल्यू ऑफ इक्विटी. सो रिमेंबर, व्हेन फ्री कैश फ्लो इज गिवन, यू हैव टू डिस्काउंट इट यूजिंग द WACC. उसमें से आप डेट वैल्यू सब्ट्रैक्ट करो, यू विल गेट वैल्यू ऑफ इक्विटी, या फिर यू कैन डायरेक्टली कैलकुलेट द वैल्यू ऑफ इक्विटी यूज सॉरी यू कैन डायरेक्टली कैलकुलेट वैल्यू ऑफ इक्विटी यूजिंग फ्री कैश फ्लो टू इक्विटी। अब वो कैसे यूज होगा? एफसीएफई, विच इज फ्री कैश फ्लो माइनस डेट रिलेटेड कैश फ्लोज इंटू 1 + g डिवाइडेड बाय के ई माइनस जी। ठीक है, this is again growing perpetuity, assuming that free cash flows are growing at a constant rate each year. So by that you will get the value of the entire business. Now, these were cash flow based methods, the dividend valuation model, the free cash flow method, and the free cash flow to equity method. जैसे जैसे we start solving the questions, you will understand कि ये इसको apply कैसे करना है। ठीक है। Now, there are market based approaches also. See, market based, market को क्या पता है? Market doesn't know the projected cash flows of the company. The market knows the price of per share. So, one of the first methods in market based valuation is the market cap method, where you do number of shares into market price per share. Okay, this is a highly dynamic number. It changes constantly in response to a change in price. Subah Reliance one share ka price will be 1400, sham ko it will be 1380. So naturally the market value will change constantly. This method is known as the market cap method, number of shares in issue multiplied by the market price per share. And along with that, you have an important method which is the PE ratio method. ये PE ratio method कैसे function करता है? Price per share is PE ratio into earnings per share. What is PE ratio? PE ratio is द वेरी मीनिंग ऑफ जो आपका नाम है ना, उसी में आपका फॉर्मूला है, प्राइस अर्निंग, मार्केट प्राइस पर शेयर डिवाइडेड बाय अर्निंग्स पर शेयर। इसको आप मल्टीप्लाई करो ईपीएस से, यू विल गेट द प्राइस पर शेयर। एंड व्हाट एग्जैक्टली इज ईपीएस? ईपीएस इज प्रॉफिट अवेलेबल फॉर इक्विटी शेयर होल्डर्स डिवाइडेड बाय नंबर ऑफ इक्विटी शेयर्स। ठीक है। एंड व्हाट इज प्रॉफिट फॉर इक्विटी शेयर होल्डर्स? इट इज प्रॉफिट आफ्टर सब्ट्रैक्टिंग इंटरेस्ट, टैक्स एंड प्रेफरेंस डिविडेंड। ठीक है, इससे आपको मिल रहा है प्राइस पर शेयर। इफ यू नीड द वैल्यू ऑफ द कंपनी एज होल, देन यू कैन सिंपली डू पीई रेशियो इनटू टोटल पोस्ट टैक्स अर्निंग्स। ये ऐसा का ऐसा फॉर्मूला लगा दो, यू विल गेट वैल्यू ऑफ द कंपनी। देर आर अ कपल ऑफ क्वेश्चंस वेयर दिस पर्टिकुलर मेथड हैज बीन यूज्ड। ठीक है। नाउ you basically, the idea is that you should use future maintainable earnings. What does that mean? It is quite possible that in a particular year the company got, the company had to bear certain extra expenses for paying a compensation to some aggrieved party, तो वो one off expense है। या फिर there could be some year in which the business entity has a sudden surge in income। ठीक है, that sudden surge in income is only for 1 year, maybe आपको lottery gain हुआ या some other gain like that, unusual gain। तो if you consider these cash flows इन द टोटल कैश फ्लो कैलकुलेशन, और आपने वो नंबर यूज किया, सो दैट नंबर इज नॉट रिफ्लेक्टिव ऑफ अ नॉर्मल ईयर, राइट? सो वेन एवर यू आर यूजिंग अर्निंग्स, यू शुड कंसिडर द अर्निंग्स इन अ नॉर्मल ईयर। सो जो भी आपके वन ऑफ आइटम्स होंगे, जो आपके डायरेक्टर सैलरीज होंगे, जो आपके कुछ अनयूजुअल आइटम्स होंगे, एक्सक्लूड दोज। मेक यूज ऑफ द अर्निंग्स इन अ नॉर्मल और अ रेगुलर ईयर व्हेन यू आर डूइंग द वैल्यूएशन। ठीक है, learning these formulas is important. These formulas are not given in the formula sheet that you have. Okay. Now, the PE ratio based method can be directly used in the paper. See, it's an easy method, easy to learn, easy to apply, easy to calculate. But see, they are based on accounting profits rather than cash flows. Accounting profits can be subjected to manipulation. Sometimes it is difficult to identify a suitable PE ratio when you are valuing the shares of an unlisted entity, right? Because see, when the company is listed, the market price is readily available on the stock exchange. अभी check करो, आपको TCS का price मिल जाएगा। But if there is some private limited company which is not listed on the stock exchange, तो उसका calculation will be very very difficult। ठीक है, calculation of PE ratio will be difficult because market price per share आपको you won't get it very easily, right? Or it might not even be possible to calculate. And of course, apart from that, it is difficult to establish the correct level of sustainable earnings. Sustainable earnings matlab, the term that I used just now, future maintainable earnings, it is difficult to calculate that because you might not have all the necessary data points with you. Okay. Now, one more method for calculating the uh, price per share and consequently the value of the business, that is the earnings yield method। earnings yield जो है, that is the reciprocal of PE ratio। ठीक है, PE ratio is price upon earnings. Earnings yield ratio is EPS upon price. Okay. And value of the company is total earnings divided by earnings yield. So if you have this situation, simply apply, if earnings yield is given to you, value of the company will be total earnings divided by the earnings yield. As I told you, it is the reciprocal of the PE ratio. Okay. Now, there is an interesting method in this approach only, in the market-based approach, which is called Tobin's market to book ratio method. Okay. How does this method work? The market value of target company is market to book ratio into book value of target company's assets. What is market to book ratio? Market capitalization upon book value. अब ये मेथड क्या बोलता है? दिस मेथड बेसिकली लुक्स एट अ कंपेरेबल कंपनी, उसका रेशो यूज करता है एंड देन इट यूजेस दैट रेशो टू कैलकुलेट इट्स ओन वैल्यू. फॉर एग्जाम्पल, see, I know Swiggy is a listed company right now, but let's assume that Swiggy is not a listed company. Zomato is a listed company. ठीक है. अब you want to calculate the value of Swiggy. You look at Zomato because it is a comparable business. Now, calculation of calculate market to book ratio of Zomato. What is that? Market cap upon book value of shares. Sorry, book value of assets. What is book value? Book value is basically the carrying amount of assets. ठीक है. Now market cap is 10,000, book value is 1,000. ठीक है. So market to book value ratio क्या होगा? 10,000 upon 1,000, which is 10. What does this ratio tell you? This tells you that the market cap of a company in the food delivery software business is 10 times the value of its assets. That is what it tells you. कि अगर एक कोई कंपनी है विच इज इन द फूड डिलीवरी बिजनेस, उसका अगर कैरिंग अमाउंट ऑफ असेट्स इज 1,000, तो दैट कंपनी हैज अ मार्केट वैल्यू ऑफ 10,000, विच इज 10 times द कैरिंग अमाउंट ऑफ असेट्स. Now, if another company enters the same sector, if both of the companies are in the same business, so whatever relationship holds true for Zomato, same will hold true for Swiggy. So, if Zomato's market value is 10 times the book value of its assets, then in case of Swiggy Limited, उसका भी market value has to be 10 times the book value of its assets. Suppose Swiggy के assets are 625. ठीक है. तो उसका market value कितना होगा? 625 into 10, that is 6250. Now sometimes you will end up making an adjustment to this number. Maybe इंटू 10 नहीं करेंगे, टू बी ऑन द सेफर कंजर्वेटिव साइड आप इंटू 8 कर सकते हो. दैट इज ऑल्सो क्वाइट पॉसिबल. ठीक है. सो मार्केट वैल्यू ऑफ टारगेट कंपनी इज market to book ratio into book value of target company's assets, and market to book ratio, as the name suggests, is market cap divided by book value of assets. See, this as a formula wise, so it is okay, but there is a problem that it is very difficult to identify a comparable company, because even though the business model is the same, the way of delivery is different, their capital structures could be different, their risk profile could be different, and when these items are different, then naturally same ratio will not apply to the other company, right? Plus it depends on the business cycles also. Again, you are making one more assumption here, that there the relationship between book value of assets and market value. See, market value of a company, people who buy and sell shares on the stock exchange, I'm sure you trade, I trade and invest. So when I look at, say, today morning, I look at the share price of Reliance. Okay, it is 1,400 rupees. At this point, I'm not really thinking na ki how much is the book value of its assets. How is that correlated to the market price per share? The market price per share of any company is, of course, based on these factors, but it is based on the market forces of demand and supply, news, speculation, events in the economy. तो ये अज्यूम करना कि यार बुक वैल्यू ऑफ असेट्स और मार्केट वैल्यू ऑफ द कंपनी में कोई बहुत स्ट्रांग रिलेशनशिप है, दैट माइट नॉट ऑलवेज बी ट्रू. So this method is not without its limitations. Okay, this is called Tobin's market to book ratio method. You will have to learn the formula. Okay, then apart from that, you have the asset based methods. What do the asset based methods do? The asset based methods, this is a very traditional approach. Okay, Indian income tax law mein, they have specifically allowed this method for valuation. What they do is they say, okay, this is a balance sheet of a company called Trisha Limited. उसके आप सारे assets का total लो, उसमें से subtract all the outside liabilities. ठीक है. What is left with you is amount belonging to the shareholders. Divide that by the number of shares, you will get the value per share. Now, one way of doing this is total of assets minus outside liabilities divided by number of equity shares, and you use the book value of each item. So what is book value? Amount, carrying amount in the books of accounts and balance sheet. उसको सीधा सीधा यूज करो. This is based on your historical cost accounting principles. उसको यूज करो, खत्म करो. Second approach is when you are using the replacement cost method. The buyer of a business will be interested in the replacement cost, since this represents the alternative cost of setting up a similar business from scratch. So you can use this method, you can use the replacement cost when you are trying to acquire a business. कि अगर आज मैं नया बिजनेस शुरू करने जाऊंगा तो हाउ मच विल अ कंप्यूटर बी फॉर, हाउ मच विल अ मशीन बी फॉर, हाउ मच विल करंट असेट्स बी फॉर. हियर आई यूज द रिप्लेसमेंट वैल्यू ऑफ ऑल द आइटम्स. And if I'm trying to sell off the business, then I should use the net realizable value of items. Why so? एक एक आइटम को कंपेयर करो, कंप्यूटर, मशीन, करंट असेट, ऑल ऑफ दैट. इफ आई वर टू सेल इट टुडे, मुझे कितना पैसा मिलेगा? दैट इज द नेट रियलाइजेबल वैल्यू. करेक्ट. सो दिस अप्रोच कैन बी यूज्ड व्हेन यू आर trying to sell your stake in a company. ठीक है. रिप्लेसमेंट कॉस्ट इज नॉट इजी टू आइडेंटिफाई. इट ऑफ कोर्स कम्स विथ इट्स ओन सेट ऑफ चैलेंजेस, सो टू से. अब आपको क्वेश्चन में यूजुअली ना ये डिसीजन मेकिंग करने का रिक्वायरमेंट नहीं पड़ेगा कि ओ विच ऑफ द थ्री शुड यू शुड यूज. अगर नेट असेट मेथड होगा तो दे विल टेल यू एक्सप्लिसिटली कि बुक वैल्यू यूज करो या रिप्लेसमेंट कॉस्ट या एनआरवी. इन मोस्ट केसेस इन योर एग्जाम यू एंड अप यूजिंग द बुक वैल्यू मेथड ओनली. ठीक है. नाउ ये तो हो गया टैंजिबल असेट्स का वैल्यूएशन. इफ यू रिमेंबर आई ए एस 38 स्पेसिफिकली सेज कि इफ अ बिजनेस हैज इंटरनली जनरेटेड इंटैंजिबल असेट्स यू कैनॉट वैल्यू द, I mean, it is very difficult to value the intangible assets, and those are not recognized in your financial statements. Now, think about it. There is a company which is really doing a good job, and that particular company is, of course, it is delivering goods and services to customers, but it has built a good reputation, good name, good brand name in the market because of the consistent good work that the company is doing. Now, think about it. If a business entity is if a business entity is constantly doing good work, it has earned the confidence of customers. Because of that, because of a positive word of mouth, because of good reputation, more and more people will come to you to buy goods and services. So this brand name that you have built is helping you to generate additional future economic benefits, or that part is what we are trying to value when we look at the intangible asset value. यहाँ पे what you do is you take the book or replacement cost of real assets plus multiplier into annual profits or revenue. ठीक है. Now what is this? This is earning potential of the assets of the company. The multiplier is negotiated between the parties to compensate for goodwill. Okay. Now what happens is what businesses say कि यार चलो एक तो book value of assets है, but because of my good reputation, because of my goodwill, am I getting any more earnings? वो कितना मुझे annual earnings मिल रहा है? Multiply that with a suitable number and you get the value of the intangible assets of the company. See, ये method beyond the point is based on your assumptions, estimates and judgments. ये बहुत ज़्यादा effective method नहीं है, but to a great extent I think it is useful. So here what you should do is pick up a suitable competitor. Say a suitable competitor for Swiggy is Zomato. ठीक है. Zomato का रिटर्न ऑन असेट्स रेशियो कैलकुलेट करो, विच इज ऑपरेटिंग असेट्स अपॉन, सॉरी, ऑपरेटिंग प्रॉफिट अपॉन असेट एम्प्लॉयड. से द असेट एम्प्लॉयड इज 1000, ऑपरेटिंग प्रॉफिट इज 100. ठीक है. सो 100 अपॉन 1000 इज हाउ मच? 100 अपॉन 1000 इज 10%. नाउ अगर जोमैटो करके एक कंपनी है, it has assets of 1000, it is generating a profit of 100. So if my business is similar to that of Zomato's business, I should also earn a 10% return on assets. Suppose my assets are 1500, so on 1500 into 10 I should earn a return of 150, but actually I'm earning a return of 200. My operating profit is 200. So normally any other competitor in the market is earning a 10% return on assets. My assets are 1500, तो मेरा ideal returns कितना होना चाहिए? 150, but my returns are 200. So operating profit 200 minus company asset base into appropriate ROA. इससे जो difference आता है we call it the value spread pre-tax. ठीक है. इसको आप पोस्ट टैक्स में कन्वर्ट करो. ठीक है. Convert it into post tax by into 1 minus tax rate. You know how to do it. And then divided by the discounting factor divided by the interest rate or the rate to arrive at the value of the intangible asset. So the idea here is कि यार normally if I were anybody else on my asset base, I would have earned a profit of 80, but I earned a profit of 100. तो ये 20 extra मैंने कहाँ से earn किया? Where did I earn the 20 extra from? The 20 extra that I got was because of the goodwill, the good name, and the good reputation of the business. एक साल में उसका value is 20. Now this is expected to go on till the end of time. So divide it by the rate, and uh, you will get your value of the intangible asset. This approach is called as the CIV or the calculated intangible value method. ठीक है. इस पे again basic calculations can be asked. And remember, whenever you have free cash flow and free cash flow to equity, the cash flow based methods are your first default choice. Whenever you are doing valuation, make use of the cash flow based methods. अगर वो नहीं है तो you can move to other numbers. Otherwise, there is no requirement to do so. And see, ये calculated intangible asset value method जो है, it has its own problems, okay? Because every company will have a different risk profile, every company will have a different cost structure, every company will have different asset portfolios, and बहुत सारा other, restrictions could be there, because of which using it एग्जैक्टली डिट्टो कॉपी पेस्ट करके आप उसको यूज करना भी नहीं चाहिए. फ्रॉम एन एग्जामिनेशन परस्पेक्टिव इट इज स्टिल फाइन. नाउ, like I told you, what we have learned in the last 45 minutes is just a reflection of, it's a tool. Okay, business valuation is a tool that will help you to tackle other situations. If you check the exam kit में ना business valuation पे separate question नहीं है, but business valuation is an ingredient which you use in M&A. Unless you value the target company, you won't be able to calculate its value. Unless you will not be able to decide whether to acquire it, dispose it, or what to do. Same thing applies for corporate failure and internal reconstruction. So the idea remains कि it is a tool. Okay, ये टूल अभी हम अलग अलग टॉपिक्स में यूज करेंगे फॉर कंपनी वैल्यूएशन, विच अगेन विल हेल्प अस टू सॉल्व सम पार्ट ऑफ द क्वेश्चन. अब the way I have planned this is, we have finished business valuation. I'll follow this lecture with a lecture on M&A. M&A का calculation theory and formulas वगैरह देख लेंगे, different approaches देख लेंगे. Then we'll quickly have a discussion on corporate failure, internal reconstruction, and then we will be shifting to question solving. ठीक है? I hope that works with you.